Good morning, everybody. Welcome back to another video. So today, yeah, um, yet again, sideways markets. Who would have thought? Now we do have a reason, I believe. There is FOMC minutes later on in the day, so I imagine this is part of that kind of just sideways price action that usually happens before things like that. So we took no trades today, as you can tell. I'm gonna go ahead and put in my chart executions here. We took none. So you don't see no arrows or any execution numbers or anything like that. Not the whole, even this stuff here, which I don't care about that. But this right here, once I seen this, I was like, yeah, we're definitely not going to make any big moves because the new range opening gap on the NASDAQ and all that was pretty shallow. And I really wasn't a big fan of that. So I don't know. It's just not really worth watching. So I went and took a shower. As you wonder why my hair looks so greasy. Not because I am not taking a shower, but I did take a shower and I was just drying out. But yeah, I was gonna go back to my roots. I was gonna go back to the silver bullet between 10 o'clock and 11 o'clock, and I marked these time frames here. I was like, okay, well, let's find a silver bullet in this time frame. Well, I told myself that if it's not gonna make any big substantial movements before 10:30, I was gonna go take a shower, and I did. And so we have like these weird like things here, like where it wicks all the way up here, then it comes down and consolidates again, goes down again to the first percentage fair value gap and the low of that the opening range gap on the S&P, which is right there. Look at the bodies. Respect that. That's the low of the new range opening gap on the S&P. So really interesting there. And then we rally higher all the way to the last week's high and also to the very top of that opening range gap on the S&P. So did that mean that I should have taken a trade? Do I feel ashamed that I missed out on anything? No, not really. I mean, it's just price was just very difficult to read, and I didn't really feel like getting in and increasing my risk. So I usually typically like to wait for very high probability setups. Like let's say if we actually have a leg up into something, that's typically when I like to look for my silver bullet trade and get my 5.25 handles and get out. And yeah, so we run into this 5-minute imbalance right here, this 5-minute CIBI, or BISI, I'm sorry. So we run into this right here. I thought we were gonna run into this one, but we ended up just running into that one because that has like no like sell side delivery into it at all. And after I got out of the shower and I watched it, and I was like, well, look at the way the bodies respect the midpoint of that BISI there. So I knew we were going to use that as like a turning point or like a fulcrum point in our leg up, but it was still very high resistance. It was still very hard to read. And after looking at price a little bit more, we have this order block here. As you can see, we trade into that, respect the mean threshold and rally higher. But was that a fair value gap? No. So I didn't take that trade. I don't think, yeah, this one right here wouldn't have been good either because we ended up running all the way into the order block anyway. So and plus, it's just very choppy. It's very sideways, very high resistance. That's why I did not take the trade in this fair value gap, even though it was within the 10 o'clock to 11 o'clock time frame, which met all the rules to the silver bullet. But the problem with that is, like, if I take the chart and let's say if we put it like right here, right? Okay, let's get over our drawings right fast. I think it's yeah. So let's say if we're right here, right? And this 10 o'clock, and there's that gap. How would I have known if it was going to go up? I mean, yeah, we didn't break no low, and we were like in this kind of run up because we were respecting the lows, but that still doesn't mean anything. That still does not give me like some sort of movement to the upside. And that's not what the silver bullet is about. The silver bullet trade is typically done within a leg up. So I have a bunch of, no, not Sublime. That's the wrong one. So this one, let's see, I want to go to my end of day summary. Let me go back to the roots, okay? Back to the simple stuff. So like right here, for example, you see how we have like this obvious run? Okay, even though this does look a little jank, it still is a run, right? Let's see, that's something like this. Okay, this is a beautiful example of the silver bullet. You see how we like just have like this obvious run towards liquidity? Do you see that? Do you see how obvious and how an angle it is? Do you see how we trade into this silver bullet right here and we run to our target? It's obvious, right? Okay, look at this. Look how much it wants to go towards something. It's not, I mean, yeah, you have a little bit of consolidation here, but we wait for it to probably purge that low and then run higher, okay? It's obvious. This right here seems a little confusing. I'm trying to find like those obvious ones. Yeah, see, like things like this. I mean, look at that. Even though it's like kind of into the move, we still get 5 handles out of it. Okay, we still get 5 handles. Let me find another one. There you go. See, we run into that and we run into the volume imbalance. Okay, now this is that was a weird day. I remember seeing that. I was just like, wow. Okay. See, look at this. Rally higher, obvious run. We've purged some sort of low down here, or we traded into an imbalance, and we rally higher. Do you see how obvious this run? It's even better because we do have a breakaway gap right there, so that just really confirms that we're running higher to like relative equal highs or the all-time highs right here. So it's obvious. Do you see how obvious that gap is? That we run into that and we run higher. Okay, it's just like with these trades here, I'm not even stressing out much. See, look at this. Obvious run on something towards the downside, the 15-minute BISI here. We trade into that, we fall getting our 5.25 handles. Okay, it's like an obvious run. This right here, this gap is not obvious. It's not something that I can really determine if this trade is actually going to work out or not. And that is just risk management. And yes, we do have this run higher right here, but that's not my model. And that's the importance of sticking to just one model, is when you stick to one model only, you know exactly what you're looking for. And it's almost like a guaranteed income. I'm not saying like there's zero risk involved, because you have to respect the risk. You have to respect the money you're putting down. But in this price action, what I'm seeing is just not really high probability of my particular setup. Yes, we traded into the 5-minute BISI there. Yes, we traded into the first presented fair value gap and we rallied higher. But is that a fair value gap? Yeah, but it's not a silver bullet fair value gap. We have a gap here, but we consolidate here and we run lower. Okay, and the reason why we do this is because look at all this. This right here, all this price action movement and the way we opened was not really high probability. It did not speak to me clearly. It was just sideways. It was the candles ranges are all within one another, and it's not really going anywhere because, as I stated, we do have FOMC minutes later on in the day, and typically the AM session, if you have some FOMC related stuff in the afternoon, you will typically see this kind of price action in the morning session. So did I force a trade? No, I didn't force one. I didn't sit there and have that, you know, when you're starting out, you have like that, oh man, I need to get in, I need to make it, because your heart starts skipping and your hands start getting kind of sweaty, and you're like, oh, there's a gap right here, maybe I can go long there, right? Well, no, because it's just like, if I take the chart, let me look at this. Do you see what I'm saying? If I take the drawings off and you see this sideways action, it's not very clear to me. And there's a lot of stuff on this chart, by the way. I just kind of realized that, but at least it's not too much. But anyway, I'm not too bothered by this, because as I stated, the silver bullet happens almost every single day. And you can even see right now, we are consolidating it again. We have this run up to this last week's high, which is also the very top portion of that opening range gap from today. And it's just not really good. It's a really high risk, low probability run, and that is what this is. It's not a silver bullet. It's not some kind of move that I find particularly in my favor, if that makes sense. So we're at the 9-minute mark, and I really don't have much else to say besides today was just not a trading day for me. And I was going to trade the ES today because I was like, well, I mean, I might as well go in bold, right? So I mean, it doesn't really matter to me. I really don't care. I'm willing to put up the risk and everything and so forth. And another thing, before I close this video out, a lot of people, and I'm going to say a lot of people, but I would say, because it's kind of like a thing amongst a lot of newbie traders. They're like, oh, you're such a wuss for not getting in. Why didn't you put down the risk, man? You have to go against the odds, right? Well, here's the thing. It's actually not a wuss move to avoid getting in. As a matter of fact, I think it's more of a bold move not getting in, because you know that your setup isn't there and you're going to stay disciplined to your model. A lot of people would have probably made fun of me for skipping out on this gap here, because it is a fair value gap and it's between 10 and 11 o'clock, but the probabilities of the rest of the previous price action was telling me that it's going to be less likely to follow my rule or my outcome or my projected kind of mental stuff that I guess I want Price to do. So I don't know what I just said, but it's not a wuss move. I think it's more of a wuss move to force a trade to begin with, to force some form of transaction in the market, just because you're afraid of missing out. Here's the thing, I'm not afraid of missing out. You know why? Because my setup happens a lot more because I have such a huge journal of moves that happen almost every single day, as you can see. Go my ES summary, and you can tell. Now, these models are a bit different, and I'm just trying to practice with more outside the silver bullet, which is not bad. But when it comes to moments like this, where it's just kind of, I'm having a hard time focusing on where price is likely to go, kind of, because, I mean, these market conditions have been really hard to read. But all of these trades that you see on the screen right now are all majority silver bullet trades. It trades into a fair value gap, and it runs higher. You see how obvious that is? You see the leg? You don't see that here. So, I mean, yeah, you kind of do it, but it's the range is so bad, and it's just choppy and messy and all that. So, I trade silver bullet, and I didn't see my setup today, and I didn't even take a trade. So, yeah. All right, so we're at the 11-minute mark. I hate keeping these videos long and all that full of nonsense. And I know that I'm kind of sounding like a repeating pattern constantly. I'm trying to keep that limited in my videos, that I want to not do the things that other people do, because it's just doesn't make any sense. So I try to keep it around 10 minutes. So yeah, I hope all of you enjoyed this video, and I hope all of you enjoy watching these videos, because I do like putting them out. I'm getting more used to putting them out and forcing myself to make them. So yeah, even if I get barely any views, it's fine. So anyway, hope to see you in the next one. Peace out.